Welcome to Dragonfly Trading. My name is Carrie. I'm a full-time trader, mentor in the crypto and Forex markets. Today's video is going to be an update on Bitcoin. We're going to take a look at SHIB and Matic. Not financial advice, just the way that I see the market. Take a look at my website. Take a look at what the course is about. Whether you're a beginner or an advanced trader, it is a solid system for everyone. Also, there's a few days left of the 40% off of the Discord for your first month. Come collaborate with us, see if you like it. I'm sure you won't be disappointed. All right, let's get started. So we're on the entire history of Bitcoin here. And I want to talk about which candle it was that confirmed that we were probably back on a bull run. Back in 2011, this is the candle starting at $5 where we broke down. This bullish engulfing candle took that high, probability-wise confirming that we were back on the bull run. In 2015, this is the candle at $318 where we broke down. This engulfing candle is the candle that took that high. In 2018, this was the candle where we broke down. This engulfing candle took that high, confirming we were back on a bull run. What we will need to do here is take the high of approximately 32,000 and this candle where we broke down. Getting over that high, probability-wise, we may be back on the bull run. The only thing that may be different here is that we have had 1, 2, 3, 4, 5 wave moves. It could be that we are ready for sideways price action where we range up in here in a big correction. Okay, where we make 3, then we rally for 3, and then we get 3 back, and we make this big correction up here. Now, do I know if that's going to happen? I do not. Okay. But if we rally in a 3-wave move from here, or even lower, where we get a big correction in the middle of 2 equal legs, that probability-wise is going to confirm that we're in for a much bigger potential sideways type correction. But let's wait and see what the market gives us. All right, let's move over to Bitcoin. We're going to be closing a weekly candle. What we don't want to see is that we come back down to 21,520 or below. Why is that? Because we don't want a wick 3 times the size of the body. So coming underneath that, we run the risk of making a bearish candle, whether you want to call it a shooting star or an inverted hammer. We don't want to come underneath that. Now today's Sunday, so at 7 o'clock, we will close this candle. Hopefully, we can stay above 21,520. Okay. Let's go down a little bit here. Let me squeeze this in. See if I can get it all in here. All of the counts, okay, every single count that we have is pretty simple here, okay? And I'm going to try to explain it as easy as possible. If we're going to pivot from here and not come any deeper, we can still call this a wave 4 as long as we don't break into 13,800 coming into our wave 1 over here. If we can push up and take out that $32,000 area where we broke down with a wave 1, pull back for a wave 2, we could potentially make the 3, 4, 5. Now the target I have is at approximately 112,000, but I can tell you we'll get an overextended 5th and the 3rd or an overextended 5th itself, making that blow off top for this wave 5 that'll get much higher. But we need to take out 32,000 get above this order block, pull back into it with a wave 2, and blast off. Okay? What we don't want to see is a push that gets above here, pulls back, and then makes an equal leg with a big correction in the middle of two equal legs. That will confirm to us that we're making an X or a B. Okay? Now, the only other thing that can happen is we don't get above this order block, that we bonk our heads on it. That will run the risk of potentially rolling over for a 5-wave move, giving this leg a partner, okay, or a 5th wave. That will approximately bring us down very deep. Don't know how deep that will go, but we will come into our 1. At that point, we would have to see, how does the market rally? Does it rally in 3 or does it rally in 5? We can also roll over from here. We are bonking our heads on the base channel. We haven't broke this trend line of the blue channel. We have got to break the blue channel and break above the base channel to even potentially break the $32,000 area. And we'll talk about this structure when we get down on a lower time frame. It doesn't matter whether we're coming from over here in a big flat, whether this is an ABC 3-wave or a WXY. What matters most is, do we make this 5-wave move? Do we make a 1 and a 2 and blast off for 3? Or do we make a 3-wave move, because we will be connecting either this leg or this whole entire structure to this 3-wave move, and we'll be getting a partner leg. Okay? The only other thing that's on the table is this diagonal. Okay? Wave 1 is the longest. Wave 3 is longer than wave 1. Wave 5 would come down to approximately 12,000 and would be shorter than 3. These are all zigzags in here. It's looking beautiful for a diagonal. If we break above 26,550, this 4 will go too high and invalidate the diagonal. Okay? All right. Let's go down to the daily here. As you can see, we have bearish divergence coming from this pivot to this pivot. We also have it on the 2-day from the same pivot and on the 4-day. Okay, that's pretty significant bearish divergence. To wipe it out, we will need to break above that $32,000 area in price. The daily needs to push above this red zone, this bullish resistance. It has got to push up there and then pull back into the bullish zone, which is between 50 and 40. We do not want to break 40 again on the daily. Okay? This is what it needs to do to try to transition out of this bearish trend and wipe that divergence out at the same time. All right, let's go down to lower time frame here and talk about this structure. Bull scenario is that this wave is some type of wave 1, that it's pulling back for a wave 2, and that this 3rd wave most likely will get overextended. Okay? Creating a wave 1 that takes out this area. A 2 that would pull back into it, like I showed you on the first chart. The probabilities of this happening, I think, are deteriorating. 1, this is very difficult for me to make a wave 1 out of it, or even it being inside of some type of impulse wave, and we'll talk about it. What I think is more highly likely is that we are using this three-wave move, pulling back for a connector, and that we'll get a higher move to the upside, and we'll have to see if it can get through this area. Okay, if we blast off, then I was wrong, and this third wave is on the table, and I'm keeping it open for sure. Okay. What's more highly probable is that we've made a WXY that's either done and we're trying to make a connector here, or it has another hit to the high. Coming over 25,330 will invalidate this being a Y wave because it will come too high. It will take out the 1.382. Okay. All right, let's go a little lower and let's talk about this leg. So to try to break this down as an impulse wave is difficult. As you can see, we have this overlap, 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 overlap. So when you see overlaps like that, you naturally think diagonals. But to try to make diagonals out of it, first thing, the problem here is this looks like a five-wave move, this looks like a five-wave move, and this would have to be a leading diagonal inside of a leading diagonal, which doesn't happen. Then with this second leg, we'd have to try to finagle a leading diagonal to make this a 1-2-1-2 type move. And this looks like a five-wave, that looks like a five-wave, and that really looks like three. Now, is this two leading diagonals? I guess it's possible, okay? Which means the invalidation point would be here at this low of 20,750. I'm not leaning towards two diagonals. I really think that this is zigzags. But for now, I'm keeping it on the table with an invalidation point of 2750. Okay. Let's put this on here. I really think, again, that it's zigzags here, okay, and that we're correcting. Of course, the invalidation point for the bull is this area. Now, the only bearish scenario I see right now is maybe this is making a leading diagonal. But coming up over this high will invalidate that. It's got to finish it where this is 1, 2, 3, 4, 5. And then it needs to pull back in three waves and not come over this high. Right now, that is the only bear option I see. I think that it's more highly likely that we made 3 here, 3, and 3. And now this is either done and this is trying to climb correctively to give this a partner leg, or this is going to become a connector for this leg to the downside, making a bigger connector here for this move to the upside in white. Okay. Now, one last thing I want to say is this can climb very high correctively. We can make 3 waves, pull back in 3, make a zigzag, then pull back in 3, and climb correctively in a channel-like motion. I have talked about this a lot with my Discord group that back in the day, this climb was just that. This climb right here before the crash was a corrective climb. All zigzags. Really looked like you could finagle an impulse wave out of here, where you could have said 1, 2, 3, 4, 5, something like this. There was no overlaps there. But what it actually was zigzag for W, zigzag for X, zigzag for Y, X, Z. Can it do it here? Absolutely. It can continue to climb correctively, getting us up there for a big X or a B. Okay. All right, let's take a look at the DXY. I forgot to mention that the DXY is on the table here. Now the question is if this fifth wave is done. I can say that we have a high peak here suggesting a third. We even had divergence between this third and this fifth. High peak, this is definitely a third wave. Notice that we have a high peak here. No divergence between this leg and this leg. This is suggesting that this may not be done, that we could be in a fourth wave. The first count I have is that this is a 1, 2, 3, 4, 5, and it's done. RSI has reset itself and created bullish divergence here. The other option is that it's not done and that the third wave is here. We're coming down for a fourth and we have to push up for again for a fifth wave. Okay. We have also divergence here. Okay, on the 6 hour, 4 hour, suggesting that this wants to try to pivot. It is a potential 5-wave move here, which means what really needs to happen here is we just make a 3-wave move. If we can just make a 3-wave move here, this 5-wave move will get a partner. It can come down into this prior 4th wave territory and still kick up for a 5th. Okay, so when this opens, let's see what does this do. All right, SHIB. Taking a look at SHIB and how deep this correction has come really leads me to think that we are going to rally. At least rally, and the bigger we rally, the better. So that when it gets this partner leg, it can potentially never break this low. This has already had a 92% correction. So what it really needs to do is rally big. So if it does get a partner leg, it can hold this higher low. Okay. Now SHIB has this contender for a 5-wave move here, but it's pulled back in 3 and now it is really struggling. It needs to get above this order block. Okay, if this is going to be a wave 1, the invalidation point is at this low. It needs to pull back and blast off. If it comes underneath this low, then it's going to invalidate this. This will end up being A, B, C, and it'll probably roll over. But SHIB really needs a rally. Really does. Now, Matic is a beautiful structure. Absolutely beautiful. We have a 1, 2, 3, 4, 5. Leading into a third, pull back for fourth, ending diagonal for the fifth. It is done well at holding its 4th wave territory, even though I don't think this is a 4th wave. It could be over here. It could be over, or just like Bitcoin, we talked about it, it makes some type of 3-wave move. But the higher this can rally, the better, so that when it gets a partner for this leg, just like SHIB and Bitcoin, it could potentially never touch this low again, making a very bullish correction up here. I do see this as a 1 and a 2. Now, if we lose this support, you can totally see that this is all insufficiency. So it's very important that this holds. Because if this does just make a three-wave move here, bonking its head, say, in this territory, then when this partner leg comes, it can potentially dump all the way down. Okay? So this low that it bounced off in this V-shaped recovery is very good, and we want to hold it. If it's going to make an impulse wave, it needs to continue. It needs to hold this green support. This fourth wave can come down to there, but it's got to stay out of its one. Okay? Better to hold where it is now, or the green. Push up for a fifth to the 1.618. That will be the third wave. Pull back for a fourth again that will hold this territory, and push up for a fifth to $1.92. It has got to make this structure to have the potential for a wave one. If it can push up that high, maybe it will get overextended and then use this area for support right in here. Okay? If it fails at the 1.618 and comes down in a five-wave move, that will not be good. We need to make this five-wave move happen so that it can either rally in a zigzag, okay? Either we make the five waves, pulls back, gives us another five, that would be very bullish, but would be a very high B, or it makes the five waves and we're on our way to continuing. Okay? I hope you enjoyed this video. I know it was a little long, and I will see you in the next one.